Hey everyone, welcome to this market update. So if you're just coming back into crypto, you might be thinking, what's going on here? We've got this huge monthly green candle for BTC, and other altcoins are being bid up as well. Let's break it down and step back a bit. Is it a good time to buy right now? Should you be taking some profits? Today, I'll look at the longer-term trend and share where I think price levels will head and what the timeline for this bull market could look like. Clearly, we're now in a new bull market. All previous resistance levels have been broken. We're reaching new highs in this cycle, and I'll show you on the long-term chart where I think we might be going from here. So if you're trading short-term, it's a crucial time to make some decisions. Around the $9,000 level, if you're a short-term trader, we're in a part of the cycle where you might want to take action if you're trading on leverage or in and out of trades over a few weeks or months. You have two main options. Either buy now and hold, especially if you're not trading on leverage, and then just hold it for 6 months or so and see where the market goes. Or you wait for a dip of about 20 to 30%, which often happens in bull markets. In this phase, we're experiencing price discovery, which means we'll see more volatility. The monthly candles can be huge, but expect some corrections along the way. There could be moments when the market is a bit too optimistic and we might see a 25% drop. If you're a short-term trader, it could be worth waiting for these drops. But I urge everyone to think long-term, because Bitcoin is not just any asset, it's the trade of our generation. The key is to hold longer than others, not to get caught up in the short-term trading. If you're interested in buying and holding, you can check out Bybit for a deposit bonus of up to $30,000. You can find the link in the description below. This isn't financial advice, of course, but let's dive deeper into the long-term picture. Now let's talk about what's really moving the markets. Many people think it's about stocks or equities, but in reality, it's all about sovereign debt. The only thing that truly controls prices is debt, especially because all of these prices are measured in dollars or other fiat currencies. When we think long-term, Bitcoin and tech assets have predictable trends. For those trading short-term, though, it's about understanding the impact of sovereign debt. Currently, governments, especially the US, are focusing on refinancing short-term debt. To make this happen, they'll likely lower interest rates, which could cause inflation. Bitcoin is already starting to price in this inflation, and this trend might continue for the next 6 to 12 months. After the debt is refinanced and inflation shows up in economic data, the central banks may shift their focus and raise interest rates again, which could lead to the next bear market cycle. Looking at previous cycles, every time we break an all-time high, we tend to revisit those levels in the next bear market. For instance, after the 2017 peak, we saw a bear market, then a recovery, and we broke new highs. The Federal Reserve plays a big role in this, as their stance on interest rates impacts inflation. Bitcoin often rallies when the Fed keeps rates low. However, if the Fed starts worrying about inflation again and raises rates, we could see a correction in Bitcoin, similar to past cycles. The Fed is currently focused on employment, so they're less concerned about inflation, which benefits Bitcoin in the short term. By around November 2025, we could reach the peak of this cycle, though the top could happen any time from spring to autumn of next year. Remember, this isn't a Bitcoin-specific cycle, but rather a macro cycle influenced by central banks. Once rates drop and the Treasury refinances its debt, inflation will rise, and eventually, the Fed may switch to a tightening phase, leading to the next bear market. For short-term traders, if prices go too high, the risk-reward ratio starts to become less favorable. Long-term holders, on the other hand, have a different strategy, as holding Bitcoin has shown strong returns over time. On-chain data shows that long-term holders are starting to take some profits, which typically happens as prices rise, though we're not at the peak yet. If you're worried about FOMO, remember to choose a price you're comfortable with and decide on a time horizon for your investment. You don't need to chase the market. If you're a long-term investor, you just need to ask yourself, am I okay with this price, and am I prepared to hold for a while? As Bitcoin's value continues to rise, you might see dips, but these don't change the long-term trade. Trying to time market tops and bottoms is difficult. It's often more successful to buy Bitcoin at a decent average price and hold it over time. Bitcoin has a historical track record of strong returns for long-term holders. If trading isn't your expertise, you might not need to outperform Bitcoin. You can just buy and hold. Bitcoin already has an impressive track record with annualized returns of 40 to 50%. If you're not comfortable analyzing market cycles, it may be enough to simply invest in Bitcoin and let it grow over time. I hope this helps.